Hey, Captain to Korn Ferry International today. For those of you who don't know this company, Korn Ferry, KFY, is a global talent management play that's the world's largest executive search firm, providing everything from executive recruitment to leadership development programs, enterprise learning, succession planning, and recruitment outsourcing services. This stock is a terrific tell for the high-skill segment of the job market. The fact that it's rallied 49% since we last spoke to the CEO 11 months ago tells you we're still very much in a Dickensian tale of two cities economy, where those with the best credentials can make a killing, while the vast majority of people still see their wages stagnating. But what really shocked a lot of people was how Korn Ferry reported what to all appearances seemed like a good quarter last night. 4-cent earnings beat off a 39-cent basis with higher than expected revenues, rose 10% year over year, and broad-based strength across the whole company. Yet the stock, after rallying nicely in after hours, ended up getting crushed today, falling $1.33 or 4.36%. Why? Look, I've poured over it, people. I think there's a lot of quibbling here with the earnings per share number. Korn Ferry had a 7-cent tax benefit. So if you exclude that, the beat turns into a miss. Plus, the company's revenue growth is projected to decelerate, and its operating margin declined versus the previous quarter, all of which may have made buyers skittish, given that going into the quarter, Korn Ferry stock was nearing a 12-year high. Still, this is a high-quality company with a stock that's been marching steadily higher for the past couple of years. I think the weakness could represent a rare entry point to do some buying. Don't take it from me. Let's check in with Gary Burnison. He's the CEO of Korn Ferry International, author of the 12 Absolutes of Leadership. Find out more about the quarter and where his company's headed. Mr. Burnison, welcome back to Mad Money.
Hey, great to be here.
All right, Gary, I got to tell you, I was reading through the notes of people are saying level of growth, upside moderating, that this is one of those moments where the company is going to take a pause. I don't know. When we've followed each other, I know that I feel that you have always had conservative guidance, but more importantly, you've got so much business, you're adding people, and people cost money, as you know. And I think that was what kind of hurt the stock, that your business is actually too good.
Well, we think it's good. Listen, this is a cyclical company, but we're very much investing. We think we've got a multi-hundred-million-dollar opportunity in front of us.
Now, you do have, speaking of multi-opportunity, you have $136 million. I have you in free cash. Only 25% of it's domestic. We know about these companies that invert in order to be able to use their cash. But with that nice cash cushion, even after all the rewards and bonuses you have to pay out, isn't it time, if this stock goes down, to announce the big buyback that everybody wants?
Well, first and foremost, we want to invest in the business. We think we've got a great opportunity to build off this heritage of search. And now what we're doing is investing in adjacent markets that are, quite frankly, bigger than the search market.
I mean, for the revenue outsource business, the recruiting, which I think is a fabulous business, we know, as you've seen other companies come on and talk about.
Yeah, the leadership development business is big, and the outsourcing business around knowledge workers. And as a CEO, listen, you're in the what business and in the how business, but ultimately you're in the people business. And so what we're trying to do is transform a business rather than being reactive and doing one thing, taking this great access we have and talking about leadership development, talking about team effectiveness, talking about succession planning. That's what we're doing with the brand.
For the top guys, I was talking with Regina Gilgan, my excellent executive producer. We were talking about what does it take now to get the top CEO job? And we were thinking that in light of some of the things that have happened in the news, that a guy who actually has experience in cyber terrorism and in people hacking is a guy who now has a leg up on other people. Is that true?
Well, let me tell you, the world has changed. I mean, we were the victim of a cyber attack. I mean, I get this call at 9:30 at night from the lawyers, and they say, you're under cyber attack. And I said, what? And they said, you're under cyber attack. And I said, what? And it's everywhere. It's any business that you look at today. So certainly, you've got to be cognizant of that, and you got to know how to deal with it.
All right, now let's go over some of the areas that seem very strong to me. Industrial, 25%. Where is that? What kind of industries? Is it oil and gas? I mean, who's doing that much business?
Yeah, sure. Energy is hot. Automotive is very, very good. Aerospace is also good. The natural resources have obviously taken a pause, given what's happened with China. Right. But we saw a nice improvement sequentially in the industrial business.
But you still had good business in Asia Pacific, right? I mean, wasn't
very good business in Asia Pacific. That's almost 20% of our organization, and the business was very, very strong.
Okay, financial services wasn't that bad, and yet I keep seeing the firings of financial services. So what part of these outfits are hiring?
Well, there's a fight for talent. It kind of feels like the 90s without the consumer and without capital markets. But investment banks are hiring, not in capital markets, but throughout financial services, whether it's asset management or insurance or investment banking.
Okay, now, Gary, one of the metrics that surfaced that I'm trying to get my hands around, because maybe it's a good one, I just know it. Revenue per consultant was minus 1%. Is that an important metric? Because I would like to see all metrics, of course, obviously be in the positive.
It is. It is a very important metric, and that was mitigated by the fact that we continue to invest into the organization, promote from within, but also bring people from the outside. So that would certainly temper the revenue per consultant.
Okay, and I just want to also get this growth. This is a note from William Blair. Growth in North American executive search business, 30% of total, is starting to slow a little, up 4% in the quarter because of tougher comparisons and margin expansion. Is that an accurate statement that your business is starting to slow in North America?
I don't think that's accurate. I wouldn't say that. You've got the summer months now where it'll be seasonal, and our guidance reflected that seasonality.
Yeah, that's what I thought, because I felt that was a too downbeat view, because I think tough comparison is important. But then to circle back to the main thing, when you hire, as you know, because you hire for other companies, you have to train. And when you train, that's expense. And that's where you are right now in your cycle, isn't it?
That's exactly correct, Jim.
Well, I got to tell you, I think that it's an opportunity, but it's been straight up since we saw you last. So maybe that's what's really been going on. Yeah, it's Gary Burnison, CEO of Korn Ferry. Thank you so much for coming on the show, sir.
Thank you, Jim.
Okay, when Gary was on last, no one really wanted the stock, and we said buy it. After today, it looks like no one wants to really own the stock. I say buy it. Mad Money's back into the break.